Hello everyone, welcome to my channel. In this channel we are going to be talking about trading in the forex market. But before we start talking about the technical analysis, the charts, the candlesticks and all these things, we are going to answer two basic questions. Is it a good idea at all to trade in the forex market? And if it is a good idea, then why do people lose money in the forex market? As you know, like more than 80%, 90% of people, retail traders, they lose money in the forex market. Sometimes they lose all of their money overnight. So we start with the first question. To answer the first question, we are going to think we have $100,000 in hand. It doesn't mean you are going to need $100,000 to start trading in the forex market. I use this number as an example because I'm going to compare trading in forex with a regular conventional business like a retail shop, a grocery shop, whatever. It doesn't matter. Any retail shop. I use this number as an example because in order to start a business like this, you are probably going to need this much money in hand. Yeah, it's different in different countries, different places of a different country, whatever. You are going to need a license. How much money it's going to cost you? Let's assume $10,000. You are going to need a shop for rent. You're going to need the material itself, so the goods. You're going to need workers. Accountant, or an accounting system if you do the accounting yourself. And you're going to have to pay for electricity, transportation, blah, 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 many other things. So let's say you get your license, you rent a shop, and you employ workers, you employ an accountant, or you buy an accounting software, you have to pay electricity every day, and you have to pay for transport and everything else. So you invest this much money. At the end of each month, your accounting is going to look like this. You will have table like this. You will have your costs and you will have your sales. Your cost will include your rent, the price you paid for the goods, your bills, electricity, water, whatever, the salaries you paid to your people, etc., 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 and your sales from day 1 to day 31 or 30 of that month. Let's say this will be $50,000. It's just an example. And you will have on this side, like, if you're very lucky, 40,000. And you will have the profit, which is, in this example, $10,000. Now, some of the money you invested in this business, you are not going to get back. If you got a license, you are not going to be able to get your money back. And end of the year or end of every 2 years, you are going to have to renew your license. We don't get into that. But a healthy business will look like this. You have the setup, you have your license, you have your goods, everything is running very well, you have very good suppliers, you have very good customers, nobody is running away with your money, everything is perfect, and you are going to get a profit 20%, 30%, 5%, whatever. Sometimes you might lose money, but this is a healthy business. Now you will have challenges. The challenge is your suppliers might stop supplying goods to you, or they might increase the prices. If they increase the prices, the number you see here will go up and the number you see here will go down. If they totally stop, then your business will stop. You will have to find new suppliers. You will have competition. It means somebody else might open the same shop near you, and then you will have to give discount to your customers. You will have to lower the prices that you're selling, and this number will fall, and then as a consequence, your profit will be less or will be minus. And you can have any other problems like just in simple terms, a financial crisis. It means just as an example, maybe people stop buying from you just because they don't have the money. Maybe they cannot afford to buy from you. So again, you depend on your customers. You depend on your suppliers, you depend on your customers, and you depend on your competitors. And you depend on the people who work for you. They might not want to work for you anymore because just they get a better salary somewhere else. So you depend on a lot of people, you depend on a lot of external factors. And if anything goes wrong, you will not be able to make this profit. You might start losing money instead of earning money. And it happens in any business, regardless of the size of your business, regardless of this initial capital. So as long as everything is going on well, you are making money. If any external factor affects your business, then you're going to make less money or no money at all, or you're going to lose money. So that's a regular business, and you're going to need a lot of money, at least. If we say in this world 100,000 is a lot of money, then you're going to need a lot of money to start a relatively small business, and then hope that everything goes on well and you make money. Things might not go, things might just simply go against you, and then you will be in trouble. You will never be able to get back this investment. So, and there is one reason. Because you're giving cash to buy fruit. So in such a business, you are putting cash to buy, let's say, fruits or metal or whatever. You're buying something which is not cash. You're exchanging your cash with some other goods, and you want to get your cash plus profit. So it's like a machine. You put cash in this machine here, and if this machine is working well, you will get cash plus profit. This machine has a lot of parts, and if any of these parts fail to work properly, you will not be able to get your cash back. It simply eats your cash. That is a regular business. Now, forex trading is no different than this retail shop, except that in forex trade you exchange your cash with cash. Let's say you have the same $100,000 and you buy British pound, GBP, Great Britain pound. Let me write it here to see better. Let's say on a certain date, you have this $100,000, and instead of buying potatoes to put in your fruit shop, you buy, and let's say the exchange rate is 1.1 approximately, just as an example. You are going to give this amount of dollar and you will get approximately 90,000 British pounds. You have two accounts, dollar account and the pound account. You sell this money to your bank and you get this much money in pound. So for this whole process of buying, of exchanging your dollar to pound, you just need a bank involved, which might charge you a small percent to give you this cash. So in the forex market, we are not going into forex market yet because this is the fundamental of forex market. We are not here yet. But you decide just to exchange your dollars into pounds at the exchange rate of 1.1. Why you decided to buy pounds to give your dollars to the bank and get pounds? Because you were thinking this was a good price at which you wanted to buy pounds. And then you will wait long enough until this exchange rate goes to 1.2, because these exchange rates fluctuate on daily basis. Every day, every hour, they go up and down. So your plan was to buy at this rate and wait until the rate is this. This time you have 90,000 and you sell your pound to the bank and you get something like $108,000. So you made a profit of $8,000 without needing a license, without a shop, without employees, without workers, without competitors, without suppliers, without buyers. Sounds very wise, no? And again, you can continue the same cycle. You wait for British pound to lose value against dollar. You exchange your dollar to British pounds. Again, when the rate goes up, you exchange it to dollars, and you're regularly making money. This is the advantage of forex market over other businesses.